What's good, guys? It's Rey-Jay back with another video. And in this one, I want to talk about Tesla SPY, the QQQ, and the overall market. Break down why I still hold the exact same view as before for the markets. My view has changed a bit on Tesla, but for the most part, it's very, very consistent for the future. But why I believe the market's going to likely squeeze for November/December. I'm going to break down some very important factors to be considering. But before I break anything down, all this information, before I get into any more details, let me just mention a couple of things. I'm personally not a financial planner, so take nothing I say as financial advice. And also, if you guys can, please check out the Webull link, which is down below and in the description. If you sign up for Webull, the link down below and deposit any amount of money into the account, whether it's $1 or $100, it's up to you. You are guaranteed up to 12 free stocks. This offer ends in just about 10 days from now, so check it out before they run out. Anyways, let's break down what's going on with the market. So I just wanted to call out some very important things in the markets. I want to make it very clear that the market is full of trickery. And if too many people turn bearish, something very, very big is going to happen. So, what do I think about the market? Here's my general view. I think there could be more downside for the market over the next week to week and a half. Yes, there could be more dropping that is coming. The market could also break a new low for October. It is still possible for a little bit more downside. However, I hold the view that the downside is going to be very limited and the market's going to ultimately bottom. And we're likely going to see a very big rally for November/December. That doesn't mean we have to be green every day, but we should uptrend quite nicely. And I believe we're going to end this year quite strong for many of the following reasons. The first reason is look at sentiment. Okay, everyone is so fearful. We're about to hit extreme fear, and when we approach extreme fear, that's when the market tends to bottom. I also wanted to add that there's a saying that goes, which is by Warren Buffett, that you should become greedy when everyone is fearful, and the same thing vice versa. When fear is making up sentiment, everyone is expecting some kind of massive crash. When retail is expecting a crash, something very bad to happen, we tend to get the opposite. Another factor worth mentioning is that when it comes to wars that happen, they tend to be bullish for the medium to long term. And you have to remember that as time goes on, many people were fearful in the beginning, but for now, the market could be interpreting things very differently. The market knows that most of retail are expecting a crash. The market knows that the economy is not in the best of places, but the stock market and the economy are not the same thing. Remember in 2020 when the economy was not in a great place? Remember when the economy was not doing well for parts of 2021? Well, the stock market kept running like crazy because the stock market is run by sentiment, it's run by institutions, by algorithms, and manipulation. Okay, so keeping those in mind, even if we are seeing fundamentals not in their best of states, the stock market could still run like crazy for many other reasons. From technicals, not to mention when everyone's expecting a crash, we're likely not going to get it. Additionally, look at the put and call ratios and the amount of shorting that's going on. There is an exuberant, amount of shorting that's going on for the fourth quarter. Now, it wasn't that crazy. It's not going to be as crazy for next week, but going into like the start of November, there are many weeks where we have 3.7 put to call ratios, millions of puts expiring in November and December, right? People already have crazy amounts of puts. People are, institutions even individuals and etc. They're expecting the crash to come. We have all these puts now, and I'm calling this out specifically because we're entering a different phase. There were weeks where we had high puts to call ratios, but the market was still in a bearish phase, and we're about to enter a bullish phase during this highlighted section. Okay, November and December tend to be when the market uptrends. Okay, keeping that in mind, the market tends to uptrend during this time, and we have so much shorting going on. So, this is going to be very, very important. Look at the seasonality. I believe that what happened to the market was the market rallied so hard between March and July that basically it kind of just like it skipped through many of these like sell phases which tend to happen during election years, and we just continue to rally and rally and rally approaching August. So I believe that starting around this July period is when this seasonality pattern became more prevalent, and that's when the market started to follow this. This is the midterm election seasonality pattern, also for like election years in general. So I want to make this as clear as possible because maybe not every year is the same, but this is just for election years, and it's a very special year because of that. So here's my view, okay? This started in July, this seasonality part. So we can actually just look at the second half of this. In July, the market tends to rally. Look what happened here. for July, the market was just rallying. It was continuing its rally. And this is the SPY chart on the 4-hour time frame. And then look at August. August is when we tend to slow down. Yes, August we had sideways price action, then we slowed down. That's when it all started, right? We tend to get this rally near the very end of August, approaching September, before the market gets a very aggressive sell off and breaks its low in September. If you look at September, we tend to rally in the very beginning. Some of these show that rally before we get a more aggressive sell off for the second half of it. For October, we tend to see a small rally for the first 2 weeks or so before a very aggressive sell off near the very end. Look at October. October came, we got this nice rally for the first 2 weeks, then a sell off, right? Just like this, right? 2 weeks in October, we rally, then we sell off for the last 2 weeks. It's the same thing that's going on. It's pretty crazy. So, what does this chart suggest? It suggests that there's going to be a rally coming as we approach November. Then, as soon as we hit November, there could be some selling here and there, but overall, it's going to be a very strong uptrend, and the market is just going to continue going and going and going for a big squeeze for the end of the year. The sell off doesn't have to be that big in November. I think it's just going to be a very strong uptrend. We're just going to continue to push up, possibly in another Elliott wave sequence. The third piece of evidence I have for this rally would be Elliott wave theory. So basically, we're on the verge of completing wave 5 from an Elliott wave perspective. Number one, this was like the first drop that we got. We got this little pump that happened in September. This very aggressive sell off we got between the very beginning of September going all the way into like the 5th of October. This would be like wave 3. This was very aggressive, the biggest sell off, which tends to happen. We just got this pump right here. That's wave 4. The final bottom is coming for wave 5. We're going to make our final bottom and then establish a bullish divergence, and a monstrous bounce is going to come after that. I also wanted to add two more things, two more pieces of evidence. Look at the daily charts on SPY. You will see that we're on the verge of establishing a bullish divergence, meaning SPY could drop more. Even if we drop below 420, come to 417, 418, this bullish divergence should still be existent. And then we should see this thing bounce very nicely from there. The last piece of evidence I have for you, and I'm trying to go through these quickly, would be look at the cup and handle on the monthly on SPY. I mean, just look at this. It's a large cup and handle. It does not have to be symmetrical. It does not have to be perfect. It's going to likely get a nice bounce soon. We could see SPY drop a little bit more. I mean, 420 could be the bottom, if not 417 to 418 or so. But I believe downside is going to be very limited, and a big pump is going to come because nobody is expecting it. People are expecting a very, very big crash to be starting. Retail is turning very, very bearish. Sentiment is in favor of fear. That's why these market makers and institutions are about to take over. So, the last thing I just wanted to mention involving all these pieces of evidence would be the fact that for the markets, with the bullish divergence potentially forming and the fact that we have a nice cup and handle on the monthly on SPY, let me just show you it one more time. I believe that this is going to throw so many people off guard. You have to remember that it's going to be a big election that's coming up. And I want to ask you a question, okay? I'm not going to try to get too much into the conspiracy theories or anything like that, but if I, hypothetically was trying to run for office or any, particular position, and I was part of a notorious party, I would not want the stock market to crash right before the election, okay? I would not want that to happen. And with these institutions, I would want them to try to pump us at the very end to give us a very strong year, because most Americans, or at least a large percentage of Americans, they look at the stock market as a measure of the economy, at least to some extent. And many of Americans would not also want to see pain in their portfolios, their investment portfolios, and etc. And there are many other factors, right? It's not just like that. I'm not saying all Americans just see the stock market as the only view of the economy. I think most Americans have such negative sentiments, and because they are, anticipating a recession, they think the market is going to crash like right now. That's another reason why the market could rally, and it just would not work in the benefit of particular people who are running for office. I'll put it that way. Okay, so yes, if a lot of Americans saw the market like rally for for the ending of 2023, and we end the year quite decently, they're going to be less negative in terms of their sentiment for a particular politician or something like that. If the market were to crash, that could be easily used against someone and make it very hard for them to win any kind of election. All right, that's just like a hypothetical example. By the way, guys, I'm not saying this with 100% certainty. I'm not promising it. I'm just like saying this just for the sake of another reason as to why this market could do this, particularly during an election year. So, what does this mean for the markets? What do I see happening? It's very simple, guys. Like I said earlier, I believe that SPY could see a little bit more downside. We could come all the way down towards the 420 area, then bounce. If not 420, we could drop a little bit more, but the buyers are going to be coming soon. We're going to be watching for a monstrous rally for November going into December. And I think the market's going to shift its trend. Obviously, for the last 3 months, okay, August, September, and October, the trend has been to the downside. We've been downtrending and downtrending and downtrending. This is going to flip to the upside. So that means we're going to pump, drop a little bit, then pump more, drop a little bit, then pump more. And the trend is going to be bullish, in my opinion, for November/December. I believe the odds greatly favor that. So, what would this move look like? Something like this, basically, where we come down like this, then we start our uptrend. We can see SPY just start respecting these levels, continuing to pump and pump and pump like this going into the end of the year. You may think it sounds crazy, but don't forget, you know, the market does not necessarily have to represent what's going to happen to the economy. The market does not always give us a good measure of how the economy is doing. And there's all these pieces of manipulation, all these shorts, and all these expectations of a crash, which incentivize Wall Street to give us the exact opposite. Don't forget this cup and handle, guys. That's my view of the stock market. Now, what about Tesla? Is Tesla going to squeeze as well? My view of Tesla is simple. I believe, and let me actually pull up trading view for this part. I actually want to show you something. Tesla is on a uptrend, but the uptrend that's like super massive could allow for some short-term downside. So what do I mean by that? Basically, when you zoom out and you look at Tesla on the daily chart, I think the daily or the weekly could work really well for this. We have a giant inverse head and shoulders on Tesla, just like this. So I believe, right, if this truly is this inverse head and shoulders, if it's truly, kind of like in this phase, Tesla could still drop to 180. It could still happen, and it could still be in a massive inverse head and shoulder still. It's not going to invalidate this formation. So the overall structure is bullish on the daily chart. That doesn't mean that there can't be more downside for the short term. It could still downtrend more. It could even underperform compared to the market temporarily, but Tesla will most likely find a bottom soon. So the 0.618 retracement happens to be around 176 for Tesla. It is possible we come down to 180 for the final bottom, but that's going to depend on many different factors. Do we hold 200 or not on Tesla? It could underperform a bit for the relative to the market. And if we fail to hold 200, then yes, I could see 193 and potentially even 180 being our bottom before this thing bounces. But at the same time, if we hold these levels, if Tesla manages to hold above 200, the bottom could already be in. So, you just want to be open minded. I believe it's going to actually come a little bit lower, just a bit more at the very least. And either way, whether it bottoms at 200 or 180, wherever it bottoms, I believe that the downside is not going to be like unlimited for Tesla. It's going to be more limited because we're going to be approaching the Cybertruck event. And I think that what's going to happen is Tesla is going to make a recovery soon. I don't know if we're going to get some kind of like temporary bounce on it. We could get a temporary bounce, then one more drop, but it's going to eventually bottom, whether it's at 200, 210. If it loses 200, then I could see like 190 to like 180, of course. But in my honest view, guys, although the chart's looking kind of weak, I believe Tesla is going to eventually see a bounce in November with the markets. It just might underperform because of the current fundamentals and what was announced during its earnings. So even if it does underperform, it could just run like much less compared to before, which means that if SPY is up like, for example, 5% for the month, Tesla could be up, for example, like, I don't know, a little bit less on like the much larger charts. But it still is very possible for Tesla to rally and pump again in November because of the Cybertruck event. I still think that Tesla's going to bounce. And I think that Tesla's going to follow the trend. But for now, Tesla's not going to bounce immediately. It may take some time for us to get that really, really nice recovery phase. And Tesla could continue to remain a little weak for another couple of weeks. Okay, I want to warn you about that because of the current fundamentals and what happened with earnings. But I believe the downside is not going to be much further from where we are. I don't think that it's going to come all the way down to like 150 a share, 100 a share. I think that's going to maintain the high 100s, if not 200 at least. And I believe that Tesla is going to bounce soon. Okay, and it's going to bounce with the market in the future. For the QQQ, same thing as SPY. This thing is most likely in a nice uh, potential bottoming phase. I think that it's going to find its bottom very close to where we are. We could see 350 technically could go a little bit lower, but eventually it's going to run just like SPY. And I think this based off the cycle and also the shorting that's going on in the markets. The monthly on the QQQ is very similar to SPY. We have a nice cup and handle that's forming. So, I mean, it could drop a little bit more thanks to Tesla and these other tickers. I would not rule out the possibility of us seeing like 350, even 347 to 345. I'm actually doubting 345. I would say like 347 to 350 is where the ultimate bottom could be. Maybe a little bit higher, who knows? But it doesn't matter. It doesn't really matter because downside is going to be very limited. I could see it dropping a few more points. 350 is not that far away. And soon it's going to find its bottom, and we're going to see a very bullish November and December. I think the same thing is going to be developing throughout the market. And I think it's going to be helped by what's about to happen. So please remember something, and that is when everyone's expecting a crash, when sentiment is very, very bearish, that is when you should become greedy. That's when you should start to suspect the unexpected. And that's why you have to be very different from the rest of the crowd. Okay. So seasonality and all these different factors are suggesting the market can uptrend. Uh, my view could change if there's a new pandemic or some like crazy thing happens. So far, we don't really have a catalyst to crash the market to new lows below like the October lows of 2022. But the most likely possibility is going to be a November/December rally because of the election year seasonality, because of the fact that there's so many shorts in the markets right now, because of sentiment and all these different factors. And don't forget that SPY and the QQQ have some nice cup and handles. All right. So thank you all so much for listening. I hope this video was helpful for so many of you guys out there. Please remain calm, cool, and collected amidst all of this uncertainty. And just know there could be some very, very nice upside coming very soon. All right. Thank you for listening. Have a good one, guys. And I'll see you guys in the next one. Market to the moon because the long term is still very bright. And peace out.